Shortage of cash lingers despite the Supreme Court's verdict on the legal tender status of the old Naira note. So far, the CBN has not yet issued any fresh statement, inducing some level of uncertainty on whether or not individuals and businesses can use the old notes for transactions. Meanwhile, Nigeria's foreign portfolio investment transactions ended the year 2022 with a surplus of 12.3 billion naira as against a deficit of 24.7 billion naira, which was recorded in the year 2021. Now, joining me virtually for more on these discussions, I have Damilola Akimbami, Senior Manager of Client and Industries at Deloitte. Thank you so much for joining us on the show today, Damilola.
Thank you for having me. Good afternoon.
Good afternoon. Let's start off with some fresh information that we are having. We've had this air of uncertainty on whether or not the Supreme Court verdict is enough to hold water, especially looking at the transaction base that we're expecting to also use the old Naira notes. But we are having information that Godwin Emefiele, the CBN governor, had a bankers committee meeting as at yesterday. That's according to information from the Anambra State governor, and whether or not we should go ahead with this information. That air of uncertainty, the impact, according to the CPPE, for example, it says we've lost about 20 trillion naira at the hit of the economy so far. Your take on what has happened so far and the latest development of this bankers committee meeting?
Yes, so first of all, the Supreme Court is the highest court of law in the country, and it has instructed that the old notes should be run concurrently with the new notes and be legal tender till the end of, or till December 2023. That's one. Two, like you rightly said, we're yet to hear from the CBN in terms of the Supreme Court's ruling. But bear in mind that in a situation like this, the Supreme Court's order should be or should suffice and should be enough to allow or to get both the banks and all stakeholders to move on this directive. But like you rightly said, we're yet to hear from the CBN, and that lack of communication from the central bank has created a lot of uncertainty around this cashless policy and with regards to the new notes and the old notes. And where you have lack of proper communication, where there's uncertainty about a particular policy, it creates room for panic and fear. And it has been really disruptive on the overall economic and business activity level. I mean, everyone is being affected by the disruption that this scarcity of the new notes have caused, and even the old notes right now. I think the only stakeholder that is benefiting from this disruption could be maybe the POS operators who are fleecing customers right now. So it's been very disruptive on overall economic and output level. And bear in mind that if the market starts to, adopts and implements the Supreme Court's ruling, that means that you're going to have both the old notes and the new notes running concurrently. That could be inflationary in the sense that we're going to see currency in circulation increase from its current level of about 1.39 trillion naira, according to the CBN's website as at January. So that could raise some inflation risks. But definitely it's been challenging for everyone, whether as a consumer, whether as a business operator. And if at all, we've seen the positive impact being felt on the digital payment system in terms of POS operations increasing. Bear in mind that where you have an inefficient payment system, it has overall impact on aggregate output. That means that turnover levels will be affected, because if I can't go to the market, I can't demand because I don't have the funds, and the manufacturer doesn't have the funds to even produce or what have you, inventory turnover will be low, production will be affected, output will be affected, demand will be affected. That would have overall impact on the economy. So by and large, if this cash scarcity persists and nothing is done about it, we could see its impact on growth numbers in subsequent quarters.
Exactly, and that's a big concern for so many industry watchers, especially for the fact that we are wrapping up the first quarter of the year. Irrespective of the election, this scarcity has definitely given a huge hit to the key sectors of the economy. But let's also have your take on what might be the next likely move of the CBN in terms of the Monetary Policy Committee meeting we are expecting, and in terms of an advice on better management of the volume of currency in circulation out of the bank's vaults. That's the concern of the CBN.
Yes, so like I said earlier that, currently the currency in circulation is about 1.39 trillion. So if the CBN, comes out to say that, okay, yes, we're in line with the Supreme Court's ruling, which, by constitution, you literally do not have a choice, then we could see that volume of currency in circulation increase significantly, because then you would have old notes and new notes in play. But more importantly is the fact that the supply of the new notes has to be increased. First of all, if you look at other countries that have embarked on similar policy reforms by introducing new notes, the old notes are allowed to run legal tender alongside the new notes for at least let's say 18 months at the very minimum. So you need to have that ample time, enough time to ensure that you have the supply of the new notes made available and you can easily phase out the old notes. So that has to be addressed. Timing is very important. Availability of the new notes too is very important. So it'll be interesting to see how the CBN would respond, if at all it's going to respond on this at its Monetary Policy Committee meeting. Bear in mind also that the CBN, and like any other monetary authority, the main objective is price stability. So the CBN and its Monetary Policy Committee are going to be looking at the impact on inflation. And if there's an increase in the level of money in the system, that could have downside risks to inflation numbers. And for the outcome of the MPC meeting, there are two likely scenarios. It's either they maintain status quo or they tighten further. We know that inflation numbers increased in January. We know that Q4 growth numbers were about 3.54% higher than Q3 numbers. And since the CBN has placed priority on inflation numbers, we believe that this is going to continue to drive its policy stance.
Okay.
As the increase in interest rates since May 2022 had any impact so far, the impact on inflation has been minimal and would require a cocktail of other policies to experience the desired effect on bringing down inflation to an acceptable level.
Wrapping up the conversation now, Damilola, let's also just quickly take a look at the FPI numbers we are having in the last 5 years. We are seeing quite a surplus here for the first time. This is some major market recovery. However, the volume of foreign transactions still remains relatively muted on the decline. What's your take on what might likely play out for the year 2023, taking into cognizance the highlights that will likely define the year? Take, for example, elections.
Yes, so I think the underlying fundamentals still remain in terms of what is driving market sentiment, because why we saw that surplus towards the end of the year, or at least in FY 2022 compared to 2021, is basically because of Airtel's performance as a result of the approval of the payment service, bank licensing and what have you, and new market listings. But the challenges, challenges still driving market sentiment remain. One is policy uncertainty and lack of clarity. We've already talked about the cashless policy issue, the election uncertainty, forex illiquidity, and difficulty in repatriation. These are some of the factors that are dampening investor sentiment, and these factors are yet to be addressed. As long as they prevail and remain, it's still going to weigh on investor sentiment and the level of inflows. If you even look at the trend, despite the fact that there was a surplus recorded, year on year, foreign portfolio inflows actually declined from 2021 to 2022, and even total foreign portfolio transactions declined as a whole. So looking at the trend, you would see that those challenges are still weighing on market sentiment, and I believe that if they are not addressed, we will continue to see this trend persist in terms of lower interest rates. Yes.